Welcome to Dr. Dan's channel. This is where we slow things down, zoom out, and examine the systems quietly shaping our lives. Not through headlines or outrage, but through structure, incentives, and power. Today's video is about a technology most people have never heard of, yet one that helps determine how pensions are invested, how markets react to crises, how governments respond to shocks, and how risk itself is defined in the modern world. Its name is Aladdin, and while it is often described as artificial intelligence, what it really represents is something far more consequential, a financial operating system sitting at the core of the global economy. Let's start with precision. Aladdin stands for Asset, Liability, Debt, and Derivative Investment Network. It is not a conscious AI. It does not think. It does not decide in a human sense. Aladdin is best described as a large-scale integrated financial risk management and portfolio analytics platform, enhanced by automation, statistical modeling, and machine learning tools. In simpler terms, Aladdin is the software layer through which global finance understands itself. Aladdin monitors and analyses over 25 trillion in assets globally. That figure alone is staggering, roughly equal to 25% of all investable financial assets on Earth, more than double the amount managed by BlackRock itself, larger than the GDP of every country except the US and China combined. Aladdin is used by major pension funds, insurance companies, sovereign wealth funds, commercial banks, central banks, asset managers, government institutions, including parts of the U.S. Federal Reserve System, European financial authorities, and large public retirement systems. No financial technology platform in history has ever operated at this scale. Aladdin performs 6 core functions that are foundational to modern finance. 1. Portfolio construction. It helps institutions decide what assets to hold, in what proportions, with what risk exposure. 2. Risk measurement. Aladdin quantifies market risk, credit risk, liquidity risk, counterparty risk, correlation risk, across equities, bonds, derivatives, currencies, and commodities. 3. Stress testing. It runs millions of simulations daily: rate shocks, inflation spikes, recessions, currency collapses, commodity surges, financial contagion scenarios. 4. Liquidity modeling. It estimates how fast assets can be sold, at what price impact, under crisis conditions. This function alone determines who survives market panics. 5. Regulatory compliance. Aladdin translates complex financial regulation into executable constraints. If it says an institution is out of bounds, that institution listens. 6. Performance attribution. It explains why gains or losses occur, shaping future behavior. Together, these functions do something profound. They define what risk means in the global financial system. This matters. Aladdin is often branded as AI, but that's only partly true. A more accurate description is a hybrid system combining deterministic models, statistical inference, optimization engines, and selective machine learning components. It uses machine learning for pattern recognition, anomaly detection, correlation discovery, scenario clustering. But final decisions are made by humans. However, and this is crucial, those humans make decisions inside Aladdin's framework. Aladdin does not command institutions, it conditions them. It sets the menu of acceptable choices, the definition of safe, the thresholds for action, the signals that trigger panic or calm. If Aladdin flags rising risk, portfolio managers reduce exposure, liquidity tightens, volatility rises. Not because someone ordered it, but because everyone sees the same signal. This creates what economists call model monoculture. When many institutions rely on the same risk engine, behavior synchronizes, reactions cluster, crises accelerate. Aladdin does not cause crashes, but it can amplify them. Because when risk models converge, markets move together. Here is where Aladdin becomes truly unique. Aladdin does not just analyze portfolios. It observes flows across trillions of dollars, thousands of institutions, every major asset class, every major region. No regulator, no central bank, no hedge fund has visibility like this. BlackRock insists, correctly, that strict internal firewalls exist. But structurally, one firm possesses unmatched situational awareness of global capital behavior. That is not illegal, but it is unprecedented. Aladdin can detect stress before headlines, liquidity shortages before defaults, correlation tightening before crashes, asset bubbles before they burst. This does not guarantee foresight, but it gives early signal advantage. In finance, that is power. During crises, governments rely on Aladdin's architecture. In 2008, it helped analyze toxic mortgage assets. In 2020, it supported emergency bond buying programs. This blurred a historic line between public authority and private infrastructure, not through conspiracy, but through competence and scale. This is the question people ask, and the wrong framing. Aladdin does not control markets the way a central planner would. It does something subtler. It standardizes perception. When everyone measures risk the same way, they behave the same way. That is influence without orders, power without commands. If you have a pension, a retirement account, an insurance policy, a mortgage-backed institution, a government bond in your country, Aladdin likely shaped the decisions behind it. Interest rates, asset allocation, risk tolerance, crisis response, not directly, structurally. BlackRock is not alone. Vanguard, another passive investing giant, exerts similar ownership influence. But Vanguard does not operate a system like Aladdin. That distinction matters, because ownership is power. But information and coordination are a different level entirely. Supporters argue Aladdin improves stability, reduces blind risk, enhances transparency, prevents worse crises. Critics argue it centralizes power, homogenizes behavior, weakens market diversity, concentrates informational advantage. Both can be true. The real issue is not intent. It is scale without governance. Aladdin is not evil. It is not sentient. It is not plotting. But it represents something new in human history. A private technological system that defines risk, coordinates behavior, shapes outcomes across the entire global economy. Without votes, without treaties, without public oversight. Once you see that structure, you cannot unsee it. And understanding it is the first step toward deciding whether this is the future we want, or simply the one we've drifted into. If this analysis helped you see the system more clearly, subscribe to Dr. Dan's channel for calm, in-depth breakdowns of the forces shaping your world. Like the video if it sharpened your thinking, and share it with someone who still believes markets are just chaos. We'll keep pulling back the curtain, one system at a time.